Stocks, investing in stocks. Welcome to the Shakaama Live Show with your host, Shakaama. Since the end of World War II, the average large stock has returned close to 10% a year, well ahead of inflation and the return of bonds, real estate, and other savings vehicles. As a result, stocks are the best way to save money for long-term goals. When you own a share of stock, you're a part owner of the company with a claim, however small it may be, on every asset and every penny in earnings. As the company's earnings improve, investors are willing to pay more for the stock. You can easily open a low-cost brokerage account online at sites like Fidelity, ChargeSwap, TD Ameritrade, or Scottrade. You can move money electronically in your account and start trading. Most discount broker sites charge a set fee of around $10 per trade. There are thousands of stocks to choose from, so investors usually put stocks into different categories: size, style, and sector. A company's size refers to its market capitalization, which is the current share price times the total number of shares outstanding. It's how much investors think the whole company is worth. Companies with large market capitalizations are large cap companies, tend to be established and stable, but because of their size, they have lower growth potential than small caps. Over the long run, small cap stocks have tended to rise at a faster pace. With less developed management structure, small caps are more likely to run into trouble as they grow. Mid caps, or medium-sized companies, fall somewhere in the middle. A growth company is one that is expanding at an above-average rate, much as tech companies did in the 1990s. Catch a successful growth stock early on and the ride can be spectacular. But again, the greater the potential, the bigger the risk. Growth stocks race higher when times are good, but as soon as growth slows, those stocks tank. The opposite of growth is value. There is no one definition of a value stock, but in general, it trades at a lower than average earnings multiple than the overall market. Maybe the company has messed up, causing the stock to plummet. A value investor might think the underlying business is still sound and its true worth not reflected in the depressed stock price. A cyclical company makes something that isn't constant demand throughout the business cycle. For example, steel makers see sales rise when the economy heats up, spurring builders to put up new skyscrapers and consumers to buy new cars. But when the economy slows, their sales lag too. Cyclical stocks bounce around a lot as investors try to guess when the next upturn and downturn will come. And finally, sector. Standard & Poor's breaks stocks into 10 sectors and dozens of industries. Generally speaking, different sectors are affected by different things. So at any given time, some are doing well while others are not. In most cases, finance, healthcare, and technology tend to be the fastest growing sectors, while consumer staples and utilities offer stability with moderate growth. The other sectors tend to be cyclical, expanding quickly in good times and contracting during recession. So then the question is, how do you choose? Although there are more than 6,000 publicly traded companies, the core of your stock portfolio should consist of financially strong companies with above average earnings growth. There are only about 200 stocks that fit that description. A well-balanced stock portfolio should consist of 15 to 20 stocks across 7 or more different industries. As a general rule, stocks with moderately above average growth rates and reasonable valuations are the best buys. Statistically, high growth stocks are usually overpriced and have a harder time meeting inflated investor expectations. The first thing to look at is the stock's price per earning ratio compared with its projected total return. Ideally, the PE should be less than double the projected earnings. A PE of no more than 30 for a stock with 15% total return potential. I went over all of this in Patreon. If you want to see all of this in action with the full diagram of everything that I'm talking about today, simply go to patreon.com/Shakaama. For these though, I believe that you have to be a $15 a month Patreon. Please like this video. Thank you for watching. I'm going to do a bunch of these today.
Hold me close till I get up. Time is barely on our side. I don't wanna waste what's left. The storms we chase are leading